Hi, it's Paul here from Property Apprentice. I just thought I'd share a few things that I've been thinking about recently, and one of those is the last 12 months. And if we look at what has happened over the last 12 months, it's been a very crazy time. There's been, obviously, we've had the pandemic, but also we've all had a huge amount of people that have jumped into the market. I just thought this would be interesting because if I look at all of the meetings that I've had over the last 12 months, especially to the latter part of last year and the early part of this year, the amount of people that I'm talking to that are just so concerned they're going to miss out and buying anything they can get their hands on just because they've got bank lending and not really taking into account the future or even looking at the returns financially of what they're buying. They just seem to want to tap out as much money as they can get. Now, I understand there's a lot of people that have missed out, and I'm talking about investors here. I do caution the home buyers as well to make sure that you are looking forward, that what you're buying is affordable. But I think a lot of investors, some people I've spoken to that aren't clients of ours, they don't seem to think that they need any business education on what it is that they're buying. They're just quite happy to jump in and get whatever they can get their hands on and have been paying silly money. Therefore, here we are now with two of the banks going to 40%, and we're going to see probably the rest of them follow on after we get the Reserve Bank announcement at the end of this month. I do also think that there's going to be a lot of opportunities with that. And also, I think that you'll find that interest rates will probably go up a lot sooner than people thought. The OCR will probably stay where it is, but I think interest rates will creep up, maybe not this year, but they will. And then we will see who has done things right. So that's what I mean by there's going to be some good buying to be had at some point. And what you've got to remember is this is always part of a property cycle. It doesn't necessarily mean that that's going to reduce values in that area or people are going to lose money because one person's got it wrong in that street. I don't see values dropping at all. I think they're just going to get steady. And now is the time for the really clever people to be getting their stuff sorted. And for our clients over the last 12 months and actually 18 months, we've been talking to them about being extremely careful about looking at rates moving forward, making sure that you have your rent increases on a timely manner, and making sure that you're purchasing well and in a structured way, taking the hobby hat off and putting the business hat on, because it has been a very crazy time. We saw it before, back when we had 20% and then 30% and then 40%, and it stopped. But there was people that were pre-approved that just had to get their hands on anything that they could. And immediately after that, when that happened, which I believe was 2016, you started to see 12 months later, people having mortgagee sales. Now, yes, that creates an opportunity for you, but that means that how wrong did they get it back then? If you think about it, 2016, interest rates started to come down. So actually their costs are reduced, but they couldn't afford what they bought just because they bought the wrong thing for them financially. Just be careful and look at the future. I think there's going to be some great opportunities coming forward, and we will continue to update you on that and look at the positives out there because there are plenty. And if you look at the whole scheme of it and the property cycle over a 5 to 10 year period, property is the best way to move forward. And this stuff happens while you're in your day job, and you're not going to get this kind of return elsewhere. So whether it be 20%, 30%, 40% to get in, be careful, think about it. Be cautious of the new build stock as well. If it's a lower deposit, we'll see what the Reserve Bank does, because then you've still got to think that long term. Don't hit the wall. But anyway, I just thought I'd leave that with you, and we will talk to you again soon.